Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, 27th day of December, 2018, and this is the Daily Report for gold and silver. We have nice upside movement in the precious metals markets. We have the dollar trading lower on the day, but we had a massive turnaround in U.S. equities, which were all scoring losses at the beginning of the day, but actually closed positive. First to gold. Gold did close off of the highs because of the recovery in stocks, but still managed to have a $5 gain today, $1277.90, and that, of course, is February gold. Silver also being pretty impressive, scoring about a 1.2% gain on the day at $15.30. Palladium trading higher, that closing at $11.95, and the only precious metal that did trade lower on the day was platinum, down $3.80 at $7.96. Now, the dollar had been under pressure for the better part of the day. It has slightly recovered, but only slightly, trading down about 0.5% at 96.06. And as I said, the big story really was the industrials. The industrials were trading lower on the day. We were down about 400 points. And you can see that we ended up with this solid green candle, indicating that the Dow had a 900-point swing, moving from these lows today all the way up to 23,138, a gain of well over 1%. S&P, we had similar action in that. That closed up about 0.25% at 2473. Traders, we witnessed the Dow yesterday move up well over 1,000 points, and then today trading lower. I believe at the low down around 600 points. It was a 900-point swing in the Dow Jones Industrial Average, and it staged its biggest comeback in 10 years, that according to CNBC. For that reason, we do have gold trading higher today, but off of the highs that it reached earlier. Now, the high today that it traded to was 1281 and change. It closed at 1277.80, or is currently fixed at 1277.80. That's a net gain of $4.80 on the day. And I believe that is a very respectable gain considering the kind of turnaround we saw in U.S. equities. Now, one thing that we talked about in our opening letter, and I think it's critically important, is that we've had a major change in market sentiment in regards to gold as we move back into rally mode after witnessing a small correction, and that correction, of course, was right here, and then returning to its upward momentum. The first thing was last week when we saw gold's price for the first time since May actually trade above the 200-day moving average, and that, of course, is this average right here. What makes this so impressive and important is most analysts use the 200-day moving average to determine whether or not a commodity or stock is in a long-term bull trend or a long-term bear trend, depending if price is above or below that. That's going to change the outlook that I have, and we're just finishing up with Outlook Gold 2019, and that will be released in the next couple of days. Now, in terms of what we saw today, we had another key element happen, and that is breaking above former resistance. I had pegged resistance as the 0.38 Fibonacci retracement level, which comes in at approximately 1275. When we first looked at the market throughout the day, of course, it was trading at around 1279. As I said, it has come down a little bit, but is still showing respectable gains, and more importantly, has closed or is currently fixed above that particular price point. That being said, if we can see this price point hold for the next couple of days and start moving to higher pricing, our next real resistance level is kind of a band, with the upper level of the band being the 0.23% Fibonacci retracement, which occurs at 1312, and the psychological century mark that occurs at 1300. I believe that this will be our next real level of resistance. It's a $12 spread between these two price points. Traders, therefore, my recommendation is to maintain our long position in February gold. We're in at 68 and change, 1268. And to maintain our current stop, we'll look to move that stop up later, but I want to see how well this market can continue to track in an upward trajectory. Traders, lastly, I do want to revisit silver, as we have seen some very, very respectable upside spikes in the market, and today's spike taking us above what I consider to be pretty strong resistance. That resistance area that I am speaking about occurs at about 1527. It is the 0.78% retracement. Realize we had a very, very deep retracement when this market sold off, and we actually closed at 1529. So just a couple of points above that, but that is still very respectable. The other thing that we can see and really say with some level of certainty is last week we did get silver moving above both the 50 as well as the 100-day moving average. And when we look at these two lower averages, of course, green is the 50, blue is the 100-day. But when we look at them, what we see is it does appear as though we're going to get a golden cross between the 50 and 100-day moving average. A continued move to the upside would really be responsible for doing that. And if that occurs, we would also see silver pricing move above the 200-day moving average. And traders, that is an extremely bullish signal in silver. It's the first time I've been able to say that in quite some time. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. And this, of course, will be the weekly review for the final recording of the year.